Manmohan Singh, do swear in the name of God I am not going to be a candidate for the Prime Ministership if the UPA were to come back into power. माना कि तेरी दीद के काबिल नहीं हूँ मैं, तू मेरा शौक तो देख, मेरा इंतजार देख.
I can tell you that here at the G20, when the Prime Minister speaks, people listen.
You know, when you go into the RBI, you will get so immersed in numbers like money supply, credit growth, inflation, interest rate, repo rate, that you will forget that there are real people behind these numbers. Always keep your ear close to the ground.
He was an economist in a sense.
The nation paid homage to this great tall leader, former Prime Minister Manmohan Singh. Tributes have been pouring in from all quarters, from sections of the political circles, from economists to former RBI governors to former bureaucrats. And of course, we have been getting you that coverage throughout the course of the day as well. The country remembers. Well, this is Closing Bell. We are in the last hour of trade for this Friday and for this week. I'm Surabhi Upadhyay. With me in the studios is Lata. And for what it's worth, and let's see if this lasts or not, this is probably the first time this week that the bulls are really trying very hard to go home with some green on the screen. 90 points up on the Nifty. Hi, Lata.
I take your point. I agree that all of today we didn't pay too much attention to markets as we normally do, not to every turn and twist. But that was for two reasons. One, because the person we have lost today is actually the maker of markets. Of course, the stock market predates him, but he gave it such a big boost and enlarged and deepened it. After all, the FPIs as a category comes in after the 1991 liberalization. They make their appearance in 1993.
And Nilesh said it so beautifully, right? That he's the man who gave people like him wings.
Yes.
In the mid-90s.
That is what I was coming to. You know, what Manish Chokani said, the brand and the brain power was what he expanded. And that's how the middle class came into existence as we now know it. And then, of course, in the latter phase, he tried to expand those goodies to, the last common man of India through Manrega, through food security. So a full life in which, how many people could have a CV like that?
I know.
That starts with, finance secretary, Deputy Chairman of the Planning Commission, RBI Governor, then Finance Minister, and then Prime Minister. That's some biodata. So that was one reason why we were not looking at every twist and turn. But the other reason why we were not looking at the zigzags in the market is because it's a thin market. The trading volumes are not high. And, as you say, the mouse are at play when the cat is away. So, there are so few people that a few trades can move the market a bit up and down. It's good to ignore these zigzags. You don't get much out of, the pharma stocks did well today, or the cement stocks did well today, because it's happening on thin volumes. The rupee and the large caps are the toast of the day. The rupee for the huge fall we saw and the equally sharp recovery, unexpected recovery that we saw in the currency, and the large caps because they have dominated the scene. It's quite clear that the FPIs are probably not selling much today because they own largely the large caps. So if we end it the way we are at this point in time, it appears that probably today the FPI selling has ebbed.
Oh, absolutely. That's what one would hope for, that the bulk of it has finished in 2024 and we won't have that added burden in 25. But that's an answer we'll come to only in the next couple of weeks, not immediately. For what it's worth, let's talk about the movers today. So what is on the green side on the screen? Let's pull up the Nifty gainers. M&M, Dr. Reddy's, IndusInd Bank, Tata Motors. These are the stocks that have a bit of a positive flair. There are not too many very clear sectoral sort of trends today. But you can say that banks, for instance, they've been largely holding up. Some of the auto stocks, not all, but some like Tata Motors, they've managed to retain a bulk of the day's gains as well. What is, however, cooling off on the other side would be some of the metal names, which we saw even yesterday. So Hindalco, Tata Steel, these are some of the names on the downside. The mid-cap market at an index level has been very, very quiet. I mean, if you look at the mid-cap index, is not doing anything right now, absolutely flat. Even the advanced decline ratio is fairly even, Stephen. It's recovered. It was down in the red for the better part of the afternoon, but it's recovered now. But if you look at individual stocks, well, then it's fun and games once again. I'll just give some examples to illustrate that point. For instance, look at Sagility, another 5% on Sagility. Look at something like Acom Drugs, the recent listing, which is up 10%. Lead Travenues Technologies, which is Ixigo. That stock is up about, I think, 5-6% as well. So lots of names. Avalon is up about 8% as well. But I think what really takes away the top honors are the new listings of the day, because look at them. I mean, before we start a conversation with our guests, let's just pull up all the 5. I've been calling it Panch Ka Punch since morning. So Mamta Machinery still up 150%. That's Sanathan Textiles still up 22%. DAM Capital has retained a bulk of this 45, 50, 55% sort of a gain as well. That's Mamta for you. DAM Capital will come up next. And many of these IPOs were very well subscribed as well. So the gains are intact for now. Transrail Lighting is up about 30%. And even Concord Enviro, the water solutions company, waste management company, that's also up about 14-15%. So 5 listings, all of them in the green. So let's get started with some trades that you can look at in the last hour. We have Nagraj Shetty joining in. Nagraj, season's greetings to you. Thank you for joining us today. So it's thin trade. What would you trade? Index, stocks?
Hi, good afternoon, Surabhi. Rightly said, Nifty has not been doing anything. There's no significant movement is happening over the last few sessions. After a downward correction of last week, Nifty has been moving in a range-bound action. Though today's market action is indicating an attempt of upside bounce, but I'm not expecting any bigger upside from here onwards. Market could encounter a strong resistance of around 24,000 to 24,200 levels in the weeks to come. And I'm expecting that whatever the gains, whatever the up move from here onwards is going to be a sell-on rise opportunity at the higher levels. And we could, from the highs, we could even see Nifty reaching down to the recent low of around 2,500 again.
Okay. Well, Nagraj, thanks a lot for joining us today. Well, I wanted to ask you whether, you already said that you're going to use the rallies to sell. Would auto stocks be in that list because they are the best performers this week?
Yes, Lata, good afternoon. Yeah, auto stocks have reached oversold region recently and showing some upside bounces. I'm not expecting any bigger upside bounces for automobile stocks, premium automobile stocks at this point of time. There is a possibility of a small bounce from here onwards, and we could see automobile stocks coming down again from the higher levels.
Okay, all right, that's autos. Nagraj, any other trades beyond autos? Anything individual stocks,
Yeah,
caps?
Yes, I have a mixed trade. One is from buy side, one is from sell side. And pharma is the one recently resilient during the weaker broader end benchmark Nifty. And the Sun Pharma is the one, after moving into a range bound action, it has made an attempt of upside breakout, even though volume is less compared to the recent highs. And I'm expecting more upside to come for this Sun Pharma. So currently trading around 1863, 1864 levels, one can look to buy at this point of time. Upside target would be around 1955, 1950 levels, and one can place a stop loss at 1810. And second one is from oil and gas front. I'm looking more weakness in IOC. IOC is the one continuously in a downtrend. Recently, we have seen some meaningful upside bounces. After that, it formed a lower top and currently showing a distribution pattern at the high levels, slightly high levels. I'm expecting further weakness in IOC, currently trading around 137. One can look to sell at this point of time, and the downside target would be around 130, and one can place a stop loss at 141.
Okay. Thanks for that, Nagraj. Anything in the banks? I mean, IndusInd Bank had a good day today. More generally, the bank Nifty itself had a smart up move and then gave up half of its gains. Is there a play either in the index or, more not the index so much as the stocks?
Still, I'm not that convinced with the bank nifty movement. Lata, recently we have seen sharp decline. Compared to that, we have seen shallow upside bounces over the last for 3-4 sessions. It is clearly indicating that there is a lack of strength in to sustain the upside bounce in banking sector. I'm not expecting any good upside momentum from here onwards, but rather we could see some weakness after the small upside bounces.
Okay. All right, Nagaraj, thank you very much. We'll, come back to you later for some more ideas. For the time, let's move on and quickly say hi to Prakash Diwan, who is joining us on the show. Prakash, always good to have you on. And this is the last Friday of 2024, right? So interesting times. I want to start with the listings, actually. Out of the 5, did any 1 or 2 or 3 or 4 or all 5 cut ice with you? Some very interesting companies here today.
Good afternoon, Surbhi, and thank you for the Friday wishes to you and Lata. You seem to be the only 2 hardworking people along with me doing this brave stuff. But yeah, I think the listings tell you a very, very clear message. The message is there's enough appetite for good quality paper, and in the process, some not so good quality paper will also get lapped up. Some of the businesses that have come on offer are very distinctly strong. They have their own edge and everything. But from a valuation, future runway perspective, if you look at Concord and Vero, in fact, that's the one that's not done the best out of the 5. I think that offers a great opportunity to look at broad basing the portfolio within this space. You could go beyond EMS and you could go beyond some of the other names that have really hit the market in recent times. And we've seen how the mature businesses in that case, when I say mature from a stock market history perspective, have been understood by people. And look at BATech, Babak, the way it's kind of completely changed its trajectory. Of course, not comparable, but same space largely, and the execution has been so good. So there will always be opportunities to buy the right stuff in this space, which has huge runway for growth. I like that particular thing. Transrail, Sanatan, okay, good businesses, but I would pay top dollar at this point in time.
Okay. Prakash, do stay on. We are now going to discuss a sector which you follow very, very, very closely. No prizes for guessing, autos. We are moving to DAM Capital's upgrades of the Indian auto stocks. They've upgraded Tata Motors, Escorts, Kubota and Bajaj Auto to a buy. First, let's hear out what Sudarshan has in terms of the details of this upgrade and then coming to you.
So one sector that has been focused in today's trade is the auto sector. Most of the stocks are high-end trade. Bajaj Auto is up around 2%, Scots is up around 5%, even Mahindra & Mahindra is up around 3%. And the reason, DAM Capital has come out with a note today upgrading most of these stocks. First one is it has upgraded Tata Motors to buy from neutral, and target is rupees 870 per share. Upgraded Scots to buy from neutral, target is rupees 3550 per share. Upgraded Bajaj Auto to buy from sell, and target is rupees 9750 per share. Top picks by DAM Capital are M&M, TVS Motor and RK Forging. What are the reasons given by DAM Capital? First, it expects recovery in FY26 on favorable macros, but near-term slowdown it believes that is inevitable. It says rural recovery may continue while urban may remain slow. Talking about the like 2-wheelers, 3-wheelers, 4-wheelers and tractor, it says tractor will remain the winner and it expects double-digit growth over next 1 year, while 2-wheelers and passenger vehicles may see only marginal growth. For commercial vehicles, it says revival will largely depend on the government's expenditure. It finds the reason of upgrades, it says valuation is now comfortable levels after the recent fall that these stocks have seen. And it says it expects normalized scenario for auto industry by mid FY26 or 27. But the main reason that it has upgraded these stocks is because of the recent fall that these stocks have fallen around 29 to 30% from their peaks. And that's the reason it has upgraded these stocks.
Okay, got that. Thank you very much, Sudarshan. Have a field day, Prakash. What's your pick of the pack?
While I may not like the idea of buying into these stocks at this point in time, January, February will probably be a very good time to kind of reassess and start allocating more. But my topic continues to be M&M. Surbhi is right next to you, and she knows we've talked about this from sub 1,000 levels and the way it's kind of moved. You know what's going to work for this company? What's going to work, Lata, for this company is they have all the vectors that you would need to for an auto company to grow. You've got electric, you've got tractors, you've got commercial vehicles. And the sum of parts, to be very fair, is probably at this 3.7 lakh crores market cap. In my view, is about 30% less than what the fair value should be. If you were to demerge these businesses, just imagine what value you could unleash. And especially tractors, I do agree with this report that Sudarshan read out. Tractors is going to be a big thing, and by virtue of that, escorts might do well. But Mahindra's electric launches at those 20 lakh price points are absolutely awesome. I mean, they actually are something which will redefine the way electric vehicles are perceived in India. So you have the Tata Motors on one side, which is trying to fill gaps at the lower end, entry-level stuff, where Mahindra is giving you a top-of-the-line, best-in-class kind of product at very affordable prices. So there's going to be a huge competition there, but I think M&M has cut out itself for a very good run in 26.
Okay, that is Mahindra & Mahindra, indeed a stock that Prakash has been backing for a long, long time now. And what an incredible journey it has had. Prakash, stay on. We're going to talk cement because that was the other major news point of the day, right? With this deal that was announced early in the morning, Ultratech Cement has picked up a near 9% stake in Star Cement for a little over 850 crore rupees. We have Sudarshan back with us to give us the details because he, thrashed out a lot of interesting scenarios in terms of pricing and what this means, the capacity, all of that Star actually has to offer as of now. Over to you, Sud.
So if I can say so, this first part of the major Ultratech Cement and Star Cement deal is done. Ultratech Cement today has acquired 8.7% stake at a price of rupees 235 per share, and it's worth rupees 851 crore. In today's block deal window in Star Cement, we saw change of hands for nearly 8.7% equity. Now the question is, who are the sellers in today's block deals? What we understand from sources that one of the promoter group is likely to have sold the stake, and two major promoters are first Bajanka Group and second is Chamaria Group. So from sources we understand Chamaria Group is likely to have sold certain part of the stake, and going forward we might see further stake sale by one of both the promoter groups or one of these two groups. Now talking about the Star Cement, it's a major player in northeastern market of India. Currently, it has 7.7 million ton per annum production capacity for cement and 6.1 MTPA, that is million ton per annum of clinker production capacity. Now, in FY23, company had a production capacity of 5.61 million tons. By FY25, it expects it to increase to 7.67 million ton, and by FY25, 7.67, FY26, 9.67, and by FY27, it's likely to increase to 12 million ton. Now, coming to at what level the deal is done. Now, if you take a FY25, that is 7.67, deal value comes around $150 per ton. But if you take a 9.67, that company has a target for FY26, deal value comes around $120 per ton. Now the major question is, will this deal also go through the similar way that we had seen for India Cement Ultratech deal? In India Cement deal, we saw that in the first tranche, Ultratech had acquired stake from Damani at a lower price compared to later on, we saw that they had to pay the premium for the stake buy from N. Srinivasan. So going forward, we'll have to see if we follow, Ultratech Cement follows the similar path even for this deal as well.
Okay, got that. Thank you very much. That's a good 360-degree perspective on the contours of the deal and what could be, because there are still some unknowns in this deal. But nevertheless, what is very clear now is that the consolidation moves in the cement sector have not abated at all. Prakash Diwan, the market responded by pulling up the smaller companies. Mangalam Cement 7.6, NCL 7.1, Sagar Cements 4%, and of course Star also is up about 3%. Anything interests you?
No, so I still like the ones that are buying. I like the buyers, potential buyers, Lata. So from that perspective, Ambuja, ACC, to my understanding, have done some very smart things in terms of the consolidation moves that they've done. I think in this case, the buyer has overpaid a tad bit just to acquire an asset which is making sense for them from a distribution perspective. But I would go with the acquirers rather than the acquired teams, or potentially acquired teams.
Okay.
Okay, all right. That is the cement sector and the deal that played out today. Just looking at the market to see if there are any additional movers and shakers. Not too many different cues to talk about. Just a word on some of the stocks that have not done well this year, Prakash. And Hormaz was with us yesterday. He put out this beautiful list, and it has some of the tallest giants, starting from Reliance to HDFC Bank to Asian Paints. So if I were to ask you a contrarian call for 2025, whether it's large caps or maybe a mid cap as well, what stock would come to your mind?
So, largely we have been hearing a lot about FMCG struggling to show volume growth and all of that. But I think that's a cyclical play, absolutely, which is bottoming out or close to that bottoming out phase. And from that perspective, with an additional optionality trigger attached to it, I think I love ITC. There is, and as a disclaimer, I do have this name since a long time in my portfolio. ITC at the current juncture, with the potential hotel business coming to you sometime in Jan first week, I don't see any reason why it will not unlock a lot of value. So, of course, market will take time to digest and get the price equilibrium to be discovered. But at $480, there's absolutely no risk that you take, but there's a significant upside in the next one. So the business is done well. It's just that it's not reflected in the price as yet. So I would go with this large cap liquid stock. Will always kind of let you sleep well, even if it goes up and down. But that's what I would take as a contraband.
Okay. Have you closely looked at IndusInd Bank lately, Prakash? Today, of course, the news was that they sold off or are very close to selling off a chunk of their MFI loans to asset reconstruction companies.
No, absolutely. I think they're doing the smartest thing in the current environment where, this is a completely written or provided for kind of a portfolio, as you know, and whatever money comes in, is going to be a bonus straight away goes to the bottom line. That's what the market's kind of rewarding that. But what they need to understand is that they really need to start behaving and functioning like a proper bank, not like an NBFC under a bank license, which at times does kind of make them do things which are very aggressive, very short term in outcomes. And I think overall they have the opportunity to scale up in that size which they are, which a lot of banks have vacated. And when I say size, it's on the size of the bank and size of the loans and the segments that they could cater to. Look how Federal Bank focused itself on the SME portfolio and did so well and continuously has been improving upon that. IndusInd needs to find its niche in that sense and grow that. But this is a smart move, at least strengthen the balance sheet when you can and get ready for the credit growth upside. So I like it, but banking as a whole is giving you too many options, not necessarily to get stuck with something which can be a bit iffy from a timeline perspective.
Okay. Well, Prakash, on that note, we will let you start your weekend. Thank you very much indeed for joining us. I won't say year end. We are going to have you back, hopefully, sometime next week as well. And we will wish you a Happy New Year on screen. Yeah. Thanks a lot for joining us.
Thank you. Thank you.
Okay, as we slip into a break, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store. Welcome back. The market towards close is continuing to maintain that green on the sensex and the nifty, 1/3% higher. Okay, more like 1/4% higher. But mid caps now flatlining in the red a bit. Advanced declines are at the moment favoring the reds a bit. No, it's green still. Although it's just about 1.02:1. Let's look at some more angles, especially from the F&O space. Let's welcome Rajesh Baheti into this conversation. He's CIO at ITI AMC. Rajesh, thank you very much indeed for joining us. I just want to ask you, yesterday all day the conversation was that because the Nifty started the December contract at 23,914, it would end there. It ended way off there. Has that created any reverses for the market, or do you think it's just one of those things that the market can handle that kind of losses?
Well, first of all, I'm not really an F&O specialist. I'm the CIO of IT.
Sorry, I'm sorry. I think I mistook you for Rajesh Baheti. I'm sorry. Sure. Go ahead, Rajesh. Okay.
Sure. So I would look at, what's going on at this moment in the real short term is probably in absence of players in the market. The real action probably will begin in January of next year. See, let's put this in context as to, what we are looking at. We've had a bit of a slowdown in the economy thanks to the reduction in or absence of government spend, because of which corporate results were impacted. And now the question the market is asking is, when do we see a revival again in government spends? Of course, monsoons have been good. And how soon do we quickly revive or to a greater trajectory, and therefore corporate earnings kind of bounce back? In the midst of this, I think we are seeing some challenges, especially which is coming from the globe. You're seeing what's happening to the rupee, the dollar, the US 10-year treasury, etc., and the implications of that as you move forward. So I think that is really where we are. Those are the questions that the markets are asking. Does the global macro mean that our flexibility to use monetary or fiscal will lessen as you move forward? And does that mean that the slowdown that we are in at this moment will take even longer to revive? And the translation of that for equity markets is, does that mean earnings will be cut again for financial year 26, which means that we could have a lackluster market for some more time to come?
Okay, first, my apologies, Rajesh. Another person with the same name is what I confused you with. I'm really sorry. But yeah, speaking of earnings, the earnings forecast that I have got from for FY26 range between 13% and 17%. That's the bull and the bear case. What's your sense? Is there a downside surprise because of Trump, or is that already built in?
So that's what we are worrying about. I think, even financial year 25 began with I think a 16% kind of a earnings growth expectation. And I think we are ending up with a lower single digit or mid single digit number for financial year 25. And I think, as you move forward, that's the second challenge that we have for financial year 26 as well, which is in case we do not have as much monetary lever or fiscal lever, and Lata, you know this better, given what's happening to the currencies and the interest rates globally, then does it mean that our revival, because really in the GDP component, G was really the one which was driving growth in the economy. And if that is not able to revive adequately, and if even private sector investments, etc., which Siemens told us is taking longer, and if that also waits to see how Trump policies pan out, then it will mean that we will be in a bit of a slowdown for a little longer, which means that translation, financial year 26 earnings could also be cut. So those are the expectations that which we are approaching this market as you move forward.
Okay, all right. Yeah, and I think that is the big worry, whether the slowdown is going to persist and whether those FY26 estimates are going to be revised downwards. Rajesh, hi, good afternoon and season's greetings. I looked at some of the big broker notes, foreign broker notes, and many people are still expecting 12%, double digit to happen. We'll probably end the current year FY25 at 5%, but the street estimates are still ranging 12, 13%, 14% in some cases. Are they too optimistic?
So, Surbhi, that's really the question that we are asking ourselves as well. Having said that, let's put things into context. India is in a multi-year capex-driven cycle, right? So there is a real estate cycle which is really buoyant, and it's a multi-year cycle. We know that. There is a infrastructure-led, central government-led infrastructure investment cycle on roads, railways, etc. Again, defense. All of that is again multi-year. There is a private sector enterprise private sector enterprise-led power sector capex, which is a multi-year. PLI-led manufacturing, so on and so forth. So we are in a multi-year capex-driven cycle. That is for sure, and therefore I think the bull market, so as to say, in India is going to be healthy, and over it will persist for a long period of time. Having said that, I think there are some clouds which have emerged from the global markets, particularly because of the election of Trump and whatever else is going on in the global macro, and that's why the question is being asked that whether that it will mean a temporary cut in earnings or a slowdown in earnings as you move forward into 26. And that is really what we are worrying about. And it does seem at this moment that expectations should be lowered from equities, at least for the next foreseeable future, until greater clarity comes on this macro situation.
Fair point. But the market is not going to allow you to wait for these answers to be revealed. So at the moment, what are your preferences? Would you go with this K-shaped recovery continuing? Are you betting on consumer discretionaries, hotels, airlines? What's your best pocket?
So Lata, that's the beauty of India. I mean, there are just so many themes that are participating, right? So it's, digital commerce companies are still doing extremely well, and they are, they are non-linear in terms of business models, right? Some of the private banks could actually continue to do well, right? Telecom can continue to do well. Pharma can continue to do well. So there are enough pockets which can continue to do well as you move forward. IT could continue to do well, especially if Trump wants the US economy to kind of get stimulated. So there are enough sectors to kind of bet on as you move forward on the positive side. Having said that, I think you could see some disappointment on capital goods. You could see some dragging of consumer-facing automobile companies, consumption, retailing, oil and gas, which are especially exposed to the global markets, global metals. So there is, I think, unlike the March 23 to September 24, where the entire breadth of the market kind of went up, now you're seeing a more selective pockets of where there is action in terms of positive side and where there is negativity. So the breadth of the market has narrowed since September of 24. But fortunately, there are enough sectors which are still positive as you move forward, and there are enough sectors to kind of view with caution as you move forward.
Okay. No, I take your point. India offers, some options, even in otherwise downbeat sectors. I'm going to ask you about how would you take advantage of the Indian rupee. But before that, let me just wrap up what happened today. It was an extremely zigzag movement in the currency. For the first time after the Trump election, since when we have been seeing a slow depreciation of the rupee, we saw a rapid depreciation. We saw a 50 paise giveaway of the rupee from about 85.27, that was the overnight close, all the way to 85.75. This has not happened in a very, very long time, perhaps not even since 2013 or thereabouts, if I remember right. But the usual reasons are there. Dollar has been strong over the 108.2 mark or 108.1 mark as far as the dollar index is concerned. Importer buying, which is normal towards the month-end, oil importer buying, all that were there. But why was the rupee allowed to depreciate so much? It's quite possible that the Reserve Bank decided to give the rupee an adjustment mode today because of the Reserve Bank bulletin in December indicating that in November, the rupee was 8% overvalued. We always get that data with a month's lag. Perhaps the Reserve Bank smelt that there are speculative forces at work after looking at that number, and they just let them have their play. Why should they get an exit at a higher price? Perhaps that was the reason. But the Reserve Bank was absent for some time. That was one reason why the rupee fell. A second reason why the rupees, people are guessing fell was because the NDF market, the offshore market for the rupee, where the rupee is traded as a derivative, there the Reserve Bank had positions. Today's expiry day in that market, and probably some of the positions were shifted onto the local market and settled. And that also put some pressure on the rupee. Be that as it may, the Reserve Bank suddenly made its appearance at 85.7, and then the losses of the currency were cut by half. That's broadly the story today. In spite of this 50 paise fall, the rupee is still an outperformer, and that graph will come up for you, both November 1st to date and Jan 1st to date. Just look at the data that's come up for you. The rupee is an outperformer. November to now, just 1.49%. And now it'll be even less because this was when the rupee was at 85.7. And of course, Jan 1 to now as well at 2.87. It is among the better performers. Now, to you, Rajesh. Rupee fall, does that make anything attractive for you?
The sensitivity of exports to our currency has not been that, favorable. So it's really, we can't find sectors which are directly, beneficial because of the rupee falling. But it does create a headwind. Look, if interest rates in America are going to go up, right? So if 10-year treasury is 4.65, it goes to 5%, right? And so imagine if you're an FI. Now you're getting a 5% yield in the US.
Risk-free return.
Risk-free return. Now, if you come to India, you'll probably have to hedge the currency. Maybe that's a 2.5%, or maybe 3% kind of a cost to you. So your break-even in fixed income guaranteed return is about 8%. Then you want an equity return from an emerging market, which you think is slightly expensive, right? The median PE of India is probably 44. So your expectation there is, not as much, which means that from the demand side of equity, FIIs could continue to remain absent. So I think it does create a bit of a headwind for us in terms of, given how FIIs are a big player in the market. Of course, they've been absent for some time, but they could continue to remain absent. At the I hope they don't start selling in a manner as you move forward.
No, fair point. At the moment, it's the US exceptionalism is still playing out because you're gaining both on the currency and on the stocks. And if you're playing fixed income as well, you're in a much better position. But obviously, such exceptionalism cannot go on forever. At some point, the rupee probably at 85.7 is already attractive. We don't know. We will know only when the markets trade in full swing, in full strength after the holiday season is over. Rajesh, thank you very much indeed for joining us. And here's wishing both you and everyone in your team a great 2025. Okay, with that, let's take a quick break. And then we are going to give you what perhaps many of you are waiting for, the buy today, sell tomorrow calls, or the other way around, the sell today, buy tomorrow calls from our technical experts. Welcome back. This is the home run. Last 20 minutes of trade left today. And the advanced declines are telling you what an even Steven game it has been. The Bulls and the Bears equally strong today, or equally weak, if you please, given the lack of volume in the market. The advanced declines graph will come up for you. And it's absolutely, touching, kissing one another. Let's get the BTST, promised BTST trades for you. And Nagaraj Sethi is waiting by. Okay, Nagaraj, is it a buy today, sell tomorrow, or is it the other way around?
Still, short-term trend remains up. Nothing has happened significantly over the last half an hour, 1 hour. The market remains muted. I still believe that at the higher level, any bounce towards 24,000, 24,200 is going to be a sell-on rise opportunity. And I'm again mentioning that the discussed earlier, the Sun Pharma is the one where one may expect some more upside in the coming week. The Sun Pharma is the one currently placed around the level slightly below what we have discussed, and one can look for a buying opportunity towards the target of around 1950, 1955 levels. And on the other side, the IOC is still looking weak, has come down a little bit after our discussion, and I'm expecting this to come down towards the downside target of around 130 in the near term.
Okay. Nagaraj, thank you very much for staying up for us and taking us through your technical trades. Have a lovely weekend yourself.
Thank you.
Okay, so that's your last technical trade, your buy today, sell tomorrow calls. With that, let's invite our fundamental expert, Mayuresh Joshi, the head of equity research at William O'Neill. Mayuresh, thank you very much indeed for joining us. Well, since you have your global team to support you, tell us what's the interpretation. I mean, US yields at 4.6%, rupee today went down all the way to 85.7 and then bounced back smartly. Does it look like this global US exceptionalism is over? Are they telling you that India is on the verge of becoming attractive?
Afternoon, Lata. I think that seems to be the case from our desk as far as the US markets are concerned. And when we speak to a lot of institutional investors across the globe, outside the US, India probably seems to be one favorite spot as far as global investors are concerned. The other markets outside India that they probably like are Vietnam and Indonesia at this juncture. And they're relatively smaller market in terms of market capitalization, and therefore, outside the US, yes, India probably becomes one good bet that investors are probably looking at on dividends.
Well, Mayuresh, I'm going to toss one sector after another at you. First up, today, the shipyard companies are doing very well. Garden Reach is doing well, and Cochin Shipyard. There's, in fact, news in Cochin Shipyard. So let's get our researcher to tell us. Upasana is joining us to tell us why is Cochin Shipyard so excited.
Well, Cochin Shipyard is certainly surging in trade today after the order win announcement. Now, company's wholly owned subsidiary, that is Udupi Cochin Shipyard, has bagged an order worth 450 crores from Ocean Sparkle, which is a Adani Group company. And mind you that this is mainly the order for the construction of 8 tugs. Now, company has indicated that the tug deliveries will commence from December 2026 and will be completed by August 2028. Mind you that the order of 3 tugs are already under construction at the company's wholly owned subsidiary, which is Udupi Cochin Shipyard, for Oracle Sparkle, and this is an additional order taking the total to 11 tugs. Now let us look at the order book of the company. The order book of the company as of 30th September 2024 stands at 22,000 crores, while the order pipeline, as indicated by the company earlier, stands at 7,820 crores.
Okay, got that. With that, Mayuresh, it's over to you. Are these companies that excite you at all? What in the infra space excites you?
So shipbuilders might continue doing well, Lata. I think specifically these defense players, including Mazgaon and Cochin, because order books remain relatively strong. They've got strong revenue visibility over the next few years, and they've been executing well. So if they continue executing well with the strict timelines that they have to adhere to, both cash flows and working capital requirements will probably be on the lower side on working capital and improved cash flows. And therefore, I think the entire cycle that they'll be probably going through in terms of the earnings mix should be relatively better. Obviously, the scope in terms of shipbuilding and ship repairs differs from company to company, but I think the margins should be relatively stable and better. So I think these companies probably hold out. Within the infra space, again, I think a few companies within water treatment as a subcomponent might continue doing well. Case in point being Welspun Enterprises as an example. Strong order book that they've probably got. The tunneling company that they've probably taken over with the expectations of more infrastructure spend expected to come through. There is a 1 trillion market size in tunneling. There is a 2 trillion market size in terms of their entire water treatment scope as well. And therefore, I think very appropriately placed in terms of government capex. In the same light, I think a lot of these pipe makers might also do well. So to a certain extent, I think companies like a Jindal Saw, as an example, where there is expectation of 12,000 kilometers of additional pipelines expected to come through as far as the CGD network is expected to take place. More orders expected to come as far as US subsidiaries concerned and the Middle East as well. So the mix in terms of a few infra companies, which are probably into water treatment, a few of these piping companies might actually in terms of earnings.
Yeah, one of them was listed today and they're all doing well. I take your point on that. The other set of stocks which have obviously been the cynosure of the investor's eye or even the trader's eye have been the EMS companies. Among the big performers is, of course, Dixon Technologies. And we spoke to the management. So just hold on there, Mayuresh. You'll have to hear them out. It is one of the top gainers. The stock has gained 180% in 2024 so far. And today, the companies, or rather yesterday, the company's arm, Dixon Electro Manufacturing, entered into an MOU with Celecor Gadgets for manufacturing refrigerators and related components. We spoke to Saurabh Gupta, the CFO, earlier today of Dixon Technologies, and here's what he had to say.
The largest opportunity is, of course, mobiles. So almost 65 to 70% should be contributed by mobiles. And I would say after mobiles, IT hardware and telecom as a category looks very promising. We have a very strong order book in both the categories. And then the other categories of washing machines, TVs would also see a growth. Some would have a single-digit growth, some would have a double-digit growth kind of a structure. But a large part of the growth will be in mobiles because that's where we have one, the addressable opportunity is huge there. And secondly, we have got a lot of customers acquisitions in this category. So pretty much all the customers which are there on the Android platform are our customers today. And Vivo is also one more step in that direction. The government focus is more on the component side. So the mobile PLI will be phased out on 31st March 2026. The other PLIs of IT hardware, telecom, and two on the component side, we still have some time, 3-4 years left in those PLIs. The government focus is now more on the components, so they are planning to bring about a component PLI. And as I mentioned to you that despite the PLI going away, we feel confident that our margin expansion can be in the range of 100 to 120 basis points over the next 2 years, because all this backward integration work that we are doing, which we are targeting through our joint venture partners, these are highly margin accretive. Apart from margin accretive, that builds a lot of strength and moat in our business.
Mayuresh was telling us that even if this PLI scheme ends off, they are going to improve their margins because of the value addition, the backward integration that they are doing. EMS stocks, Dixon or any one of them, are they still something you would yarn?
So we'd wait for decline because I think quite earnestly, I think they have moved quite a tad much in terms of valuations. But yes, I think the points are well taken. The size itself for the market is expected to go threefold. So might be a 60-80 billion market as we head into 2030. Having said that, I think the backward integration with expectations of diversified supply chains, the PLI schemes aiding and the China Plus One theme might actually work out for these players. Let's not also forget that the ODM part, which is the original design manufacturing part, that component, as it starts improving on the balance sheet, the margin accretion will also start taking place over the next few quarters. So there is enough scope in terms of margin expansion, operating leverage getting played out, and earnings expanding at a decent pace. But valuations are a tad bit expensive. So I think we wait for declines on counters like an Avalon. We continue holding, Lata, as a clear disclaimer, stocks like Dixon in our portfolio, but bought at way lower levels.
Yeah. No, I agree. In spite of the fact that they're actually showing 100% growth, in terms of revenue, it is still in terms of PE quite an ask. Yes. Mayuresh, we're not done with you. We have more questions. You will have to give us a few more minutes. Please wait on. We take a quick break and we are back. Welcome back. The market's not done much when we took that quick coffee break. It's, again, just a 0.25% higher, no matter which index you pick, except the Nifty, the mid-caps, which is also a 0.25%, but it is 0.25% cut. The others are in the green, so it's a narrow 1:1 in terms of advanced declines. Mayuresh Joshi of William O'Neill is still with us. Mayuresh, I've thrown enough stocks at you. Now you tell us, what would be your top 3 picks as you move into the next year?
So each from different sectors, Lata. One is obviously from the digital space, so mobile advertising, Apple India. Our take is that the earnings which have historically gone top line at 47%, EBITDA PAT at 40% might very well continue because of the sheer converted users that they're getting onto their platform. And they're coming in at a good rate. So I think the CPCU now is around 57 rupees 10 paise compared to 55 rupees 6 paise in the first half of last year. And therefore, I think as the base expands, as the mix between domestic and institutional or international remains standard or expands, earnings growth will remain quite stable. So this is one stock that we continue liking. The other one is Praj Industries. Obviously, I think a large player outside ethanol because they're diversifying into other fuels. Sustainable aviation fuel is an example. Marine biofuels, and a lot more experiments in terms of the actual product has actually been conceptualized and delivered. So to a large extent, as this market evolves, there is significant amount of earnings growth that can come through. They've actually put out a target of 10,000 crores by 2030 with a significant share of exports at 50%. So I think they will be able to achieve that target, in our opinion, much earlier than 2030. So I think the earnings story continues. And the third within the banking space, Karur Vysya Bank. Our own take is the numbers which had come out in Q2, advances growth, deposits growth, very solid. NIMs have remained very, very stable. ROEs, ROE expansion might actually continue because of the mix that they've got in terms of both credit underwriting as well as the credit deposit ratios, cost income ratios expected to come down, and expectations of return ratios actually improving in the next few quarters as well. So a few of these stocks that we continue liking at markets.
Okay, that's interesting. One digital, one manufacturing, literally, manufacturing infra, and another finance. Very interesting mix. But I'm going to throw another sector at you. That's real estate. One of those sectors that's had a fairly decent rally over the past three years, I would think. It's a good cycle. And to celebrate that, we spoke to DLF's Ashok Kumar Tyagi to understand, more importantly, the trends in the luxury realty sector and, of course, his outlook for the company this year and in next more FY26 because he's already in silent period. Hear out what he has to say. Mayuresh, we're coming back to you.
Target is to eventually hit a gross margin of in the range of 45 to 50%. We are currently hovering at the 37 to 40% mark. And as more and more luxury product offerings come to the market, I think we should start hitting our target margins. For the fiscal 24-25, we had given a guidance of 16 to 17,000 crores. And I think we look comfortably placed to meet and hopefully slightly exceed that. I mean, obviously, the guidance for the next year should be a clip up on this, but I think the specific number we'll typically announce after the end of Q4. And I think we'll just stick to that piece. Our margins on new sales continue to be in the 40% plus range. And as Dahlias enters, I think this should start inching towards the late 40s mark.
Okay, so that's some of the goalposts that Mr. Tyagi drew up for us. Mayuresh, DLF or realty sector in general?
No, so I think we continue holding stocks like a DLF Oberoi in our global portfolios. I think the cycle still has 2-3 years of headroom left. And therefore, I think the expectations in terms of pre-sales velocity expected to continue at a decent pace. Leverage has come down quite significantly. Inventory is not so much of concern for the entire industry at this juncture. And they're following an asset-light model as they foray into tier 1, tier 2 cities. So the core developers, a few quality ones we continue holding. But what we like are the EPC guys. So Capacite Infra is an actionable idea that we like at William O'Neill. Our take is strong order book in excess of 9,000 crores, giving revenue visibility over the next 2 to 3 years. They've got a perfect mix in terms of private, public. They've got a perfect mix in terms of how they're delivering these orders or executing them. In terms of margin profile, the balance sheet is relatively strong. And therefore, our take is that over the next few quarters, execution will ensure that the earnings momentum continues on balance sheet. And therefore, expectations of a stable return that can come through in terms of price action can be expected. So something like we like at this juncture is Capacite.
Okay. Thank you very much, Mayuresh. You really covered a wide span of stocks and sectors. Thank you very much for joining us. If we don't meet you on the last 2 trading days of 2024, here's wishing you and your entire team at William O'Neill a brilliant 2025.
Thank you so much, Lata. Wishing you the same, Lata.
Thank you. Okay, so the market's ending with actually a little better than it was about even half an hour ago. Not as good as the start where we thought we would run away with 23,900. But 23,820 is something we will take with both hands. It's 1/3% higher, sensex, nifty and nifty bank. The mid-cap further disappointment of the day with a loss of, okay, not much, just about 0.28%. So again, not very disappointing. It's even Steven as far as advanced declines are concerned. Absolutely 1:1 as far as the advanced declines are concerned. For the week, the Nifty has actually ended in the green. It's ended with a 1% gain, nearly 0.9% to be precise. Okay, now let's get to the individual stocks in the Nifty. For the day, the gainers have been Dr. Reddy's about 3%, Indusend 2.5%, nearly 2.4%, M&M 2.4%, Tata Motors. So auto stocks did well today. Eicher Motors, Tata Motors, M&M, all three of them doing well. And among the IT stocks, Wipro did extremely well. I shouldn't forget Bajaj Auto. That stock also rose about 1%. Trent was a winner for a better part of the day, up about 0.87%. And Pharma remained like the year that was. Even today, DRL and Cipla were among the gainers. Among the banking stocks, we saw ICICI Bank do very well. Bajaj Finance, I shouldn't be counting it as in the banking space, but broadly finance, that one also was among the gainers, gaining about 1.25%. HDFC Bank and ICICI Bank were the two banks that kept the Nifty Bank in the green, or 1/3% higher. What didn't do well, State Bank didn't do well. It was 1.5% lower. Among the other stocks, Hindalco, ONGC, Coal India, BEL, Tata Steel, Adani Ports, HDFC Life. So there's no really pattern to the kind of red tick that we are seeing. Well, stocks of larger volumes that did well, well-traded stocks. Intellect Design Arena finally gave up some gains. Remember, this week, it has gained something like 23% after the fall today. After this 3% fall today, for the week, it is still up about 23%. The company has told the stock exchange that they have nothing, they have no news to report that would affect stock prices, but there you are. Among the other stocks that fell today, Ola Electric was down about 3.8%, almost 4%. Hindustan Copper, BHEL, GAIL, NHPC. So basically, power infra was not the toast of the day. Metals as well didn't do too well. And among the stocks that did very well, Finolex did well, Devyani International, Sagility, IndusInd Bank, those were the stocks that did well. And of course, all the IPO listings did extremely well. I think we should put out all of them one by one. The IPO listings were quite clearly the toast of the morning. Sanathan Textiles, I mean, what a view. All the 5 of them, Mamta Management, all those stocks doing extremely well in terms of IPO listing. We wrap up on closing bell on that note, but don't go anywhere. We'll wrap up the week for you on our Editors Roundtable.